Hello guys, welcome back to the channel. Today we're going to be talking about whether or not you should buy this recent pullback in Solo. Okay, this is Electrameccanica company and they trade on the Nasdaq under the ticker symbol SOLO. And recently this stock has been on fire sale. It's down by over 40% when it traded around its highs around like $10.81. And recently I bought a $500 position in Solo, just a very small one in case the stock pulls back more at around $6.40 a share. Okay, and again, I'm going to be talking about whether or not you should buy. And the main reason for this dip and this sell-off is one, the EV sector as a whole is sort of taking a bit of a breather. And again, Citron Research, which is a renowned short seller company that usually short sells electric vehicles, they came out and they're like, Solo is a complete joke. There's not one real institutional investor here, et cetera, et cetera. And that is the first stock to go back down to trading at like $2 a share, like it was, a couple months ago. Okay, and just know that they benefit from the stock price decreasing if they're initiating a short position in it. Okay, so take of course what they say with a grain of salt. All right, and I mean, you might say that these. For Electrameccanica, the Solo is their flagship product, right? It's this quirky little um, three tricycle looking car, very, very small, and it's definitely catering towards a more niche market, right? Which is the main investor concern for a company like this, right? That they're not going to be able to sell enough products. Their production capability is only 20,000 vehicles in a year. However, they do have two other vehicles in the pipeline, the Tofino and the E-Roadster. Okay, so we're going to talk about their financials, about their position, and why I started a position in Solo, and whether or not you should buy this recent dip of over 40%. Okay. So first off, we already talked about the short seller report. Let's look at some of their financials. So we can see here that they're trading right now at market cap of $500 million, and you can see that the previous close was $6.85, and that 1 year target estimate is $8.41. Okay, so a little bit of upside if you're considering the average analyst estimate. And here we can see that they've missed earnings in Q2 and Q3 by quite a bit. However, this is a starting company, this is a growing company, and so it's expected that they're going to take a loss. Okay, and if we're looking at their quarterly revenue for Q3, they had 327,000 in revenue against a loss of close to 15 million. Okay, however, again, that's to be expected, especially with a new startup. However, they also do have 100 million in cash that will hopefully give them enough liquidity as they're ramping up production. Okay, so if we're looking at the 3 month chart and some technicals, we can see right now sitting at $6.44. We can see that the MACD is converging lower, right now sitting at around 0.9. And we see the relative strength index at 50, so neither overbought nor oversold. Okay, so somewhere in the middle. So I think potentially there may be a bottom, and or the $6 price point is a pretty good price to get into the stock if you're looking to build a position in Solo. Okay, and again, I got my position around this price point, and so I don't think there's going to be much more negative pressure, and this might be near a bottom. Of course, I may be wrong, but I think it's an attractive evaluation. Okay, and as we can see here, not too many short positions in the stock. We can see short percent of float is 10% as of November 30th. So again, not a significant amount. I've seen way higher in companies like Nordstrom where there was over 40% short interest. Okay. Um, However, the short position did increase from 5.84 million shares outstanding to 7 million shares outstanding. Um, However, again, this is not such a huge short position, so this downward pressure is not just, a massive short position and short interest in Electramechanica. Okay, so that generally tends to be a good thing. Okay, and if we're looking at some, what this company has going for it, so not only do they have their flagship Solo product, um, the company, of course, plans to launch two other electric cars, which we're going to look at, the Tofino and the E-Roadster. Okay, and these are vintage classic sports cars, so they're not like, they're not trying to compete in the same space as the Tesla sedans, for example, right? It's definitely towards a more unique market, but it is good to know that they also have two additional vehicles in the pipeline in addition to the Solo. Okay, so that's pretty much the competitive advantage is the low cost of the Solo cars, and again, trying to cater towards the more commuter side base of electric vehicles. So people who commute to work, who want a unique product, who and want to make a statement, right? So And also, one thing that I also do like about them is that their subsidiary Intermeccanica has been building high-end specialty cars for over 60 years. Okay, and this is a big advantage for Electrameccanica, right? So again, they have the Solo here, and these are the stats here, and it's more like a commuter vehicle. And then they have the Tofino, which again is expected to come out, and this is a sports vehicle. And this can seat two, and then finally the e-roadster again kind of looks hip, and it's definitely not for everyone. And those are their three vehicles that are coming out, but they already have the Solo out on the market right now. So if we're looking at their investor presentation for November 12th, first off, what I like about the Solo is that it's already in production. Okay, so production of these Solos began on August 26th because they already had the 60 pre-production Solos in 2019 and 2020 for US and Canada for on-road validation testing. And I have to say, the Solo is again a Canadian company. That's where I hail from. I'm from Ontario. But anyways, they already started producing these vehicles, right? So it's already a company that has products on the market, which is what I like, okay? Which is what I like to see. And therefore they'll be able to ramp production up to 20,000 solos pretty easily, okay? And start making their other products down the line soon, okay? And again, one thing that you have to look at is the true cost of ownership, and this, I believe, is Solo's true competitive advantage. Not only is a small EV car capable of fitting one person, that also has tax benefits in certain states, I believe California and Oregon. Look at the total cost of ownership of the Solo, which is $38,783, whereas the next competitor, electric vehicle competitor, is the Mini Cooper, which has a total cost of ownership of 53,000, close to 54,000, which represents a 39% premium over the Solo. Okay, so again, this is a very unique product that's catering towards a very specific population, right? The commuter population who wants to go green. Okay, um, and furthermore, if we're looking at the challenges that Solo faces, is okay. Well, first you have a large portion of people commuting to work in a personal vehicle by themselves. That's 76%, right? And therefore, there's 3 to 5 seats left open during commutes with standard vehicles. And the average commute to work is 16 miles each way. And so, therefore, Solo caters towards the population who's commuting to work uh, alone, okay? And, you know, they're saying that this car is fun and trendy, environmentally friendly, and so therefore they're trying to cater towards very specific um, populations, right? That sort of are more hip and more, they like the fun and trendy aspects of clothes, of cars, etc. Okay, so one, they want to do the initial launch of the Solo EVs in Los Angeles in around mid 2020. Okay, and so there are 4.6 million commuters in Los Angeles with an average 30-minute commute, which is an ideal market for the Solo. Okay, and so what they're saying is that um, Los Angeles is a leading location for EV adoption and a well-known commuter's nightmare, right? So Solo will be able to navigate traffic much better than these larger internal combustion engine vehicles, and they'll also make a statement, right? And they're also looking to roll these sort of kiosks out in California and also Oregon, where people like to be more trendy and be more out there. And definitely, if we're looking at the Solo, this definitely is a car that will cater towards that. And potentially, I'm thinking even if they launch out in Europe, this could be a big success because I've seen cars looking like this in Solo in Europe. They're more smaller, they're more trendy, and more hip. Okay, so that's definitely what I like about Solo. Okay, and if finally we scroll down to their financials, we can see that they have $100 million of cash on hand with zero long term debt. And this should give them enough liquidity for them being able to ramp up production and finally get enough of vehicles out there so they can start making a profit. Okay, so of course I'm invested in Solo, and I think if you're looking in Solo as a long-term play, now might be the time to initiate a small position. All right, and again, please do your own due diligence before buying and selling stocks. This is of course just my advice. Definitely do your own research. However, this is just my opinion. And again, if you did like this video, please smash a thumbs up button and subscribe if you haven't already. And there are a couple links down below that you can check out if you want some free stocks. Okay, and that's all for me today. Thank you and have a fantastic day.